Welcome back to the Wall Street Podcast. Today, we're embarking on a deep dive into Goldman Sachs Equity Research's latest report. It's titled, China Cosmetics, 2Q25 Wrap, Improved ROI, Stabilizing Demand, Rising Divergence on Brand Cycle Turnaround, by Giant Jahwa. And it came out September 14, 2025.
That's right. This report gives us a really good look at how the China cosmetics sector performed in Q2 and the first half of 2025. It points to, well, sequential market improvement, much more disciplined discounting, which is interesting, and a noticeable divergence in how different brands are actually doing. Lots for investors to unpack.
Okay, let's zero in on those core findings then. The report mentions, what, 4 crucial incremental trends shaping things?
Exactly. 4 key ones. First, enhanced margin support. This is coming from better performance online, think JD, but also strong offline results from names like Giant Biologics and Maogipping. So it really signaled smart channel optimization.
Okay.
Second, local Chinese brands are accelerating their push into premium segments, and they're actually showing some early success there.
Capturing the higher end.
Right. Third, we're definitely seeing more M&A activity and overseas expansion. You've got local leaders, Proya, Maogipping, actively looking abroad, especially Southeast Asia.
Interesting. And the last one?
The last one is about discipline around big shopping events, specifically Double 11. Companies seem to be maintaining a stricter approach. Pre-sales started earlier this year, October 9th. The idea is to protect that ROI, reduce some of the marketing cost pressure.
Right. That makes sense. It's fascinating how these forces interplay. So what are the main drivers behind the better ROI and this stabilizing demand we're seeing, especially when you consider the broader economic picture?
Well, the stability really comes down to a couple of things. That discipline discounting we just mentioned, particularly for Double 11, that's one part. But it's also coupled with improved operational efficiency. That actually led to a pretty significant 2.3 percentage point expansion in gross profit margin in Q2 in the first half.
2.3%, okay.
Yeah, and strategic channel management, too, focusing on those higher margin platforms like Tmall and Douyin, and also leveraging their physical stores. It's all been quite instrumental.
You mentioned the local Chinese brands pushing into premium territory. How exactly are they positioning themselves for, future growth, both at home and internationally, trying to take on the established global players?
Well, they're not just raising prices, it's more fundamental. They're trying to shift consumer perception, challenge the global giants on quality and brand image, often drawing on cultural elements.
Right.
And globally, the expansion is quite aggressive. Take Proya, planning an 8-share dual listing in Hong Kong that opens up new capital, obviously. Maogipping is aiming for its first store outside mainland China by the end of this year, 2025. And Giant Biologics is also pushing harder into Southeast Asia. These aren't small moves.
No, it definitely sounds ambitious. So this brings us to a critical point for our listeners, the investors. With all this varied performance you highlighted, how should they interpret this divergence among the leaders? And what's the valuation trend telling us?
It's a key question. The sector has re-rated back up to around 30 times 12-month forward PE. That's sort of mid-cycle level.
Okay.
But, and this is crucial, performance is absolutely not uniform. You have companies like Giant Biologics and Shanghai Jahwa showing really strong execution. They get buy ratings in the report. On the other hand, you see challenges for Boatane and Bloomage. Bloomage actually got a sell rating, citing weaker medical device sales and GPM contraction.
So a real split then?
Exactly.
No.
It means investors really have to scrutinize the individual brand cycles, their specific strategies, their execution. You can't just rely on the overall sector trend anymore.
Okay, so stepping back from the pure investment angle for a moment, what does all this mean for the everyday consumer? How might these, market dynamics actually impact people's choices or experiences?
Well, you might start noticing a stronger, maybe more sophisticated presence of these premium Chinese cosmetic brands, both on physical shelves and definitely online.
Right, more visibility.
Exactly. And the shift in strategy for something like Double 11 with the earlier pre-sales, it might mean a more structured approach to deals, perhaps less frantic, could change how you plan your shopping. And, of course, the global expansion piece means you, as a consumer, might encounter these Chinese beauty brands in more international markets soon. That means more choice, potentially more competition. Understanding these shifts helps gauge brand reach, too.
Mm-hmm.
So wrapping up this deep dive, China's cosmetics sector shows this complex picture, doesn't it? There's disciplined growth, yes, but also these really significant strategic shifts. It really underscores that even as the market finds a kind of stability, factors like brand cycle timing and, crucially, operational execution are what really differentiate the winners.
Indeed. So for you, the listener, this analysis offers, hopefully, a more nuanced view than just the surface trends. The key takeaway, perhaps, is that stabilization doesn't mean everyone wins equally. It puts a premium on finding those strategic innovators, the disciplined operators. Maybe consider how these trends, the local brand strategies, the international push, might ripple out, affecting not just investment potential, but the broader landscape of global consumer markets.